Today was a very significant day. It's a day that I have been anticipating for some time. And it's also a day that the mainstream financial media really doesn't understand. And the way they're reporting it is not actually accurate. And they're missing the finer points here, the more salient points. I don't miss those points. I understand. I can read between these lines, and I know exactly what happened today.
Peter Schiff reflects on a pivotal day in the markets, challenging mainstream narratives. He suggests that media misinterprets the Federal Reserve's stance on inflation, claiming victory when the real implications are more nuanced. Despite the Dow hitting a record high, Schiff cautions against celebrating, presenting a unique perspective by comparing the Dow's value in gold, revealing a historical context that challenges the current market euphoria. Schiff concludes with a warning about looming issues for the U.S. stock market, advocating for a cautious approach and considering alternative investments such as foreign stocks, emerging markets, and gold. With that, let's dive into the video to hear his full thesis.
Now, the way the mainstream media is framing this is that the Fed won. This is the victory dance. The Fed has won the inflation fight, and that's why it doesn't have to hike rates anymore. Rate hikes are over, and we can now look forward to rate cuts that are going to be starting next year, maybe early next year. And of course, the market is celebrating. The Dow was up better than 500 points today. In fact, it set a new all-time record high. The Dow closed above 37,000 for the first time ever. And the intraday high, I'm reading it, was 37,094.85. Now, even though the Dow hit a record, it wasn't the biggest gainer on the day. The Russell 2000 was up like 3.5%. Although that's the only index that didn't hit a 52-week high. The S&P 500 and the NASDAQ hit new highs for the year, although only the Dow set a record high. Although I do want to put that record in its proper context because the mainstream media will never do that. So if you take the price of gold of approximately $2,000 an ounce, although right now it is trading above that by a comfortable margin. Let me check on the current price of gold. It's at $22,040 almost, so $40 above $2,000. But if you just figure about $2,000 just to make the math easy, at $37,000, the Dow is roughly 18.5 ounces of gold. So that's the price of the Dow if you buy it with gold. Well, that's not a record high, not even close. In fact, in 1966, the Dow was about 20 ounces of gold. So from the 1966 peak to today, in terms of real money, the Dow is actually lower than it was in 1966. In fact, it's maybe lower than it was in 1929 in terms of gold. But if you want to know where the record high was, it was 1999, not that long ago. In 1999, the Dow cost 42 ounces of gold, almost. That's the all-time record. The Dow has never been more expensive, priced in real money, than it was in 1999. Now, that's how big that bubble was during that decade. But we're still down 55+% from that record. So the price of the Dow in gold would have to double from here in order to get that record, to reclaim that record. So it's not going to happen. But the reason you want to think about the price of the Dow in terms of gold is because gold has real value. You can't measure it in terms of the dollar. The dollar's lost 99% of its value relative to gold since the beginning of the Federal Reserve. So obviously, the price of everything is going to go up when you're measuring it with something that's gone down by 99%. So you take that out of it and you look at the real value, and it's not a record. But historically, the Dow is expensive. 18.5 ounces of gold, is a high price. The Dow does not deserve a high price. I think the Dow should actually have a low price. There are so many problems looming on the horizon for the U.S. stock market that it should be trading at a discount to its historic average, not at a premium. I think we have a long way to go on the downside for the real value of the Dow. Now, I don't know, nominally, the Dow could keep rising. And in fact, after today, I expect the U.S. stock market to keep rising. Not for the right reasons, but for the wrong reasons. But it looks like the Dow's going to go up. I don't recommend buying it because I think foreign stocks will beat the Dow. I think emerging markets will beat the Dow. I think gold stocks will beat it. So I think that there are better horses to be on. And I do think, though, that the Dow is going to do better than the NASDAQ. I think that this new rally is going to be led by value stocks, even in the U.S.
In this next segment, Peter Schiff emphasizes a shift in market dynamics, predicting that real businesses, not just hyped-up companies, will be the driving force. He notes the Dow's outperformance over the NASDAQ, attributing it to a changing trend favoring international stocks, emerging markets, commodities, and gold. Schiff foresees these trends dominating the market for the rest of the year and the entire decade. Additionally, he delves into the excitement among investors, pointing out the broad buying spree that boosted not only stocks, but also gold. Schiff discusses his expectations for gold support just below $2,000, highlighting the significant buying interest in the precious metal at that level.
Real businesses are going to be the drivers this time, not the pie-in-the-sky, hyped-up companies. That's one of the reasons that the Dow outperformed the NASDAQ today. So I think that shift is taking place. But there's a much broader shift that most investors haven't even noticed, and that's the shift to international stocks, to international value, emerging markets, commodities, natural resources, gold. These are the trends that I think are going to dominate going forward for the remainder of this year and then for the remainder of the decade. But let's go back and talk about what happened today and why investors were so excited and bought stocks, and they bought everything. Gold was up, I think, $45 an ounce today and up another $10 this evening, so $55 an ounce so far. I mentioned that I thought the support for gold would be just beneath 2,000. I didn't think that 2,000 would be some kind of line in the sand that it couldn't cross, but I did think that we wouldn't get too far below it because I thought there was major support looking to buy gold below 2,000, and that's what happened.
In today's insightful analysis, Peter Schiff sheds light on the significant market developments that unfolded. He challenges the mainstream narrative, emphasizing the real value of the Dow when measured in gold and cautioning against the current market euphoria. Schiff predicts a shift towards international stocks, emerging markets, and commodities, with real businesses taking the lead over hyped-up companies. As gold sees support just below $2,000, Schiff provides a unique perspective on the broader trends shaping the market landscape. Thank you for joining us today. If you found this information valuable, don't forget to subscribe, like, and share your thoughts in the comments below.